I'm Ross Nadwick with Van Ahnen Company with your closing comments for June 24th. The grain complex had a really tough week here. We had corn actually closing down 53 cents on the week, soybeans finishing down a little over 56 cents on the week, and spring wheat down about 21. A lot going on this week. Of course, we had the sell-off that started on Monday. That came in with the forecast that confirmed some rain coming in, moisture coming in these dry areas, so that sparked the sell-off. We had that follow through all week long. We weren't able to find any sustaining or significant support on the way down here at this point. Again, next week we're going to be watching that weather as well, but we have a lot going on in this market coupled with that. For instance, the June 30th crop report on Thursday. Right now the analysts are looking at corn acres to be down slightly versus expectations earlier, soybean acres to be up some, and wheat up just a little bit as well. Along with that, today we had the announcement of Britain leaving the EU there at the same time, so that also sparked a lot of profit taking and risk off type trade in the outside markets. That sent the dollar spiraling higher, adding even a little more pressure to the commodities in general. The Dow also off very strong. So back to the soybean market, we with that we continue to watch where these rains are at. These rains are most beneficial to corn at this time. The cash markets in both corn and beans have been quite strong yet, so there's some positive light at this thing. And then the wheat market's just lacking a lot of any real story here to get us off the bottom end of the trading range that we've been sitting on here for a couple days. Over in the livestock markets, they also had a tough day, following the Dow lower. We got a little optimistic yesterday, hoping we'd see something more supportive one more time here ahead of the cattle and feed report. The cattle and feed report for cattle did come in almost right on expectations, 110% placements, just a little over the 109 expected. The cattle and feed number at 102%, and then we had marketings at 105, which was as expected. The June hog and pig report, by and large, came in 1% over on about every sector. The cold storage reports for both of them were slightly friendly versus last year. Both freezer stocks dropped just slightly. And then in the milk complex, that also felt a little bit of pressure along with the outsides. I'll leave you with a disclaimer. Past performance is not indicative of future results. Futures and options trading involves risk of loss and is not suitable for all producers.